Hey there, finance enthusiasts, welcome back to our channel, the place we dive deep into the world of money and economics. Today, we're tackling a burning query on everyone's mind. When will interest rates be decreased in the USA? What if we instructed you that an easy flick of a change in the world of finance could impact your savings, investments, and even the housing market? Imagine the electricity of understanding when the USA would possibly simply hit the brakes on interest rates, doubtlessly saving you lots of dollars. Let's get started. Why are interest rates a warm subject matter in the USA proper now? Interest charges have come to be burning trouble in the USA due to their full-size influence on the economic system and personal finances. As the price of borrowing money, interest rates play a fundamental function in finding out the accessibility and affordability of loans. Whether it is a mortgage, auto loan, or credit scorecard debt, fluctuations in interest rates at once affect month-to-month repayments and basic debt burden. Furthermore, interest rates have an impact on funding decisions, affecting the profitability of groups and the overall performance of the inventory market. Given their wide-ranging implications, it is no surprise that interest rates have captured the interest of individuals, economists, and buyers alike. How can a reduction in interest rates affect mortgage payments and credit card debt? A reduction in interest can have a direct effect on personal loan repayments and credit scorecard debt. When interest rates are lowered, debtors regularly trip a reduction in their month-to-month personal loan payments, which can furnish enormous alleviation for homeowners. This discount on the fee of borrowing can also make housing greater affordable, probably stimulating the actual property market. Similarly, savings card debt can end up greater manageable as interest rates decrease. With decreased interest rates, the element of every price that goes in the direction of paying off the primary debt increases, permitting debtors to decrease their standard debt faster. What secrets lie behind the timing of interest rate reductions in the USA? The timing of interest rates markdowns in the USA is influenced by a multitude of elements and frequently entails cautious evaluation and decision-making by the central bank. The Federal Reserve, for example, intently video display units financial signs such as inflation rates, employment levels, and GDP growth. If the economic system is experiencing low inflation and gradual growth, lowering interest rates can be a method to stimulate borrowing and spending, thereby boosting financial activity. Additionally, international financial trends, geopolitical factors, and financial balance issues may have an impact on the selection to alter interest rates. While the specific moment of interest rate markdowns might also no longer be predictable, grasping the elements at play can grant precious insights into the broader financial landscape. What factors influence the decision to lower interest rates? The decision to low interest is influenced with the aid of several factors to acquire specific economic objectives. Central banks, such as the Federal Reserve, verify key warning signs such as inflation, employment, and financial boom to decide whether or not a price discount is necessary. If inflation is low and there is a want to stimulate monetary activity, reducing interest rates can inspire borrowing and investment, thereby boosting customer spending and business expansion. Additionally, global economic conditions, change rates, and economic market balance are taken into account as they have an impact on the normal financial outlook. It is a refined balance, as interest rates changes have to think about short-term economic stimulation and long-term sustainability. Can know when interest rates will be reduced help individuals save money? If borrowers anticipate a rate cut, they may also decide to extend taking on new loans or refinance current ones to take benefit of decreased interest rates. For homeowners with adjustable-rate mortgages, a fee discount should lead to decreased month-to-month payments, permitting them to keep more money towards financial savings or different economic goals. Additionally, individuals carrying high-interest savings card debt can strategize and pay down their balances before rates are lowered, decreasing the ordinary interest expense. Being conscious of interest rates developments empowers individuals to make knowledgeable economic choices that can positively affect their financial savings and general economic well-being. How does monetary policy affect savings, investments, and the housing market? Monetary policy, which includes interest rates adjustments, has a big influence on savings, investments, and the housing market. When interest rates are lowered, the returns on financial savings bills and fixed income investments, such as bonds, tend to decrease. This can instantaneous individuals are trying to find higher yielding funding options, doubtlessly using up demand for a riskier property like stocks. Lower interest rates can also make borrowing extra attractive, stimulating funding in businesses, infrastructure projects, and actual estate. In the housing market, decreased interest rates can make homeownership extra affordable, probably growing demand for houses and using up prices. Conversely, greater interest rates can have the opposite effect, of cooling down borrowing and investment interest. What fascinating insights do we discover about interest rates and their potential financial consequences? Understanding the relationship between interest rates, inflation, and monetary increase can furnish insights into the fitness of an economy. Changes in interest rates can have a ripple impact on a range of sectors, impacting client spending, commercial business investment, and job creation. Moreover, interest rates can impact foreign money exchange rates, affecting worldwide exchange and competitiveness. Recognizing the potential financial consequences of interest rate changes lets persons and corporations adapt their economic strategies, catch opportunities, and navigate the ever-changing economic landscape. That concludes our video series on the interest rates being reduced in the USA. We hope you found this information helpful and informative. Remember to subscribe to our channel and check out our investment guide for more tips and advice on managing your finances. Thanks for watching.